Hello, today we are going to discuss one of the most interesting investment products, IPO. IPO is an initial public offering, the process of a company or early investors selling shares of a private company in the stock market. So instead of private, no one can become a shareholder. It becomes public. Anyone can become a shareholder. As a result of an IPO, shares are traded on the exchange. Recently, among the companies that are now traded and which have conducted an IPO, you can find Facebook, General Motors, and so on. And first of all, we have to speak about IPO history, because the earliest type of IPO was the activity in the ancient Rome called publican. These people bought from the government the right to collect taxes in the remote or recently conquered territories of the country. The process of paying a contribution to the government and preparing for a trip to a remote territory was often unaffordable, even for wealthiest people. So they had to form and join stock companies in the modern sense. The shares of such societies were incredibly popular on the Roman exchange called Forum. Currently, the first IPO that we can call IPO was conducted in March 1602. It was IPO of the Dutch East India Company. The company suggested that its founders be held accountable for the fate of sailing ships, set off in search of new lands, treasures and species, then valued in Europe by its weight in gold. This was due to the fact only one ship out of 3 returned home, while the rest became victims of force majeure. At the same time, a successful ship brought huge profits. Thus, the percentage of a possible shareholder's profit directly depends only on the amount of his contribution, the measure of which became the first shares in the world. In the United States, the first IPO was the public offering of Bank of North America around 1783. So now we have to find out, why do companies conduct IPOs? So the first reason is that these companies can get capital that is less expensive than credits or bonds, which doesn't need to be returned. For example, General Motors received $23 billion in 2010 and Facebook 2 years later $18 billion. And the second one, that image enhancement were listed on well-known exchanges. For example, Twitter was in New York. The third reason, the emergence of fame, brand recognition and an increase in customer flow. So, for example, before the IPO in 2011 on Nasdaq, Yandex was well known only in Russia. The next reason is the increase in the liquidity of shares due to the open sale on the stock exchange. One more reason is strengthening the transparency of the issuer's activities and documentation and increasing confidence in it from potential partners and creditors. However, along with this, company acquires a lot of obligations, both to thousands of new investors and both to regulatory authorities. So there are several disadvantages to completing an initial public offering. So the first one are significant legal, accounting and marketing costs, many of which are ongoing. Also, it is a requirement to disclose financial and business information. And again, meaningful time, effort and attention required of management and IPO. One more reason is risk that required funding will not be raised. And of course, loss of control and stronger agency problems due to new shareholders. And one more risk is increased risk of litigation, including private securities class actions and shareholders' derivative actions. And beyond all that risks, companies conduct IPOs. And during that IPOs, they sell stocks. And please note that at the same time, early investors can also act as sellers for IPOs. For them, this is a great chance to take profit from investing in these companies at early stage. Traditionally, the normal ratio of the volume of shares sold by the company and investors is 50-50. However, it depends on the specific situation. By the way, many corporations, especially American ones, offer their employees many favorable conditions for the purchase of shares on IPO. This simultaneously increases their loyalty and allows for additional funding. So IPO is an incredibly popular investment product. And why do investors so interested in this product? First of all, it's high profitability. For 2019, this profitability increased to 70% average. The second reason is IPO of large companies. So right now they see a strong rise in the stock market. All companies that wanted to conduct an IPO are waiting for this particular time, since the chance of a successful listing is higher. To make sure of this, you can just look at which companies went public this year. For example, for 2019, LinkedIn, Uber, Lyft, Beyond Meat, Levi Strauss, Dropbox, and many other companies. The third reason is safety, because the market is fully regulated and all operations are official. And the fourth reason is speed of income, so IPO investors hold stocks for up to 3 months. This is a relatively quick investment, there is no need to wait a year or more to earn money. And despite the complete transparency of financial data and information of the state of the business, you should not forget that IPO is risky for investors. It is difficult to determine not only the fair value of securities but also the direction of the medium-term trend. Most companies entering to the market are young and are in the phase of a dynamic growth, which adds uncertainty and risk, complicating the predictions of stock potential. So right now a little conclusion for this part of this video, because this video will be divided in 2 parts. So in this video we discuss the history of IPO, pro and contra IPO, and why it is so popular among investors. All other features and how we can participate in IPO we will discuss in the second part of this video. And if you have any question, please comment below this video. Goodbye.